Kitco News special coverage of the Gold Forum Americas is brought to you by New Pacific Metals and Silver Core Metals.
Our streaming and royalty companies coming to the fore during this market turndown. I'm with Shaun Usmar. He is CEO of Triple Flag Precious Metals. How you doing, Shaun?
I'm doing well, thank you.
Thumbnail Triple Flag for us, please.
Started the business from scratch just over 6 years ago. Pure streaming and royalty business, precious focused. IPO'd in May last year. We just listed on the New York Stock Exchange, about $2 billion market cap. We'll do just around 90,000 ounces this year, 20-year portfolio plus life, and lots of embedded growth and no debt, nearly 100 million of cash on the balance sheet and hungry for more.
What I always like about talking to streaming royalty companies is that you do deep due diligence on mining companies. You have deals that are coming to you, plus also understanding what your portfolio is out there. Let's step back first, though, and what's the pain point of miners out there?
It's a challenging environment for miners right now. I think a lot of them, it's margin compression and inflation in particular. I think they've suffered through the pandemic with supply chain, getting the right sorts of skills, and indeed, in this environment, finding the right sort of liquidity. I think more traditional forms of debt and equity are expensive and maybe just not available.
Talk about Pumpkin Hollow and Nevada Copper. I see that in August there was a $93 million financing deal that you did with them as well too. I think Nevada Copper has had some challenges right now in terms of getting out.
Yeah, I think you need to zoom out at the sector and see. We've seen some of the best companies in the sector really see deferrals, capital inflation, and big companies can withstand that, and single asset producers, that's pretty hard. So I don't think it's unique, but I think it does highlight the importance of having supportive investors at a time like this when traditional forms of funding aren't there. You know, they've had similar things with inflation and costs that have brought them down. We're part of a funding consortium where we'll provide 30 million, and the idea is really to support that management team to get it into commercial production, which we've diligenced it to your point, and we think they've got a good way to get that. We hope to have an announcement soon.
It was interesting when I was looking at your results because you also had mention of carats and diamonds in there. And it's one of the first time I've seen like a streaming and royalty company having that piece on there. Could you talk about the Renard operation? How is it then? Also, how's the market for diamonds?
I think another example of really how the patient long-term capital can support miners through tough times. You know, the business is in distress. Ourselves and some of the partners really helped that through a tough time when the bottom fell out of the diamond market. We've seen it recover really well. We're a small investor in the grander schemes. We have a 20% diamond stream. Cisco has a very large one, in fact, on there. We did this back in 2017. They've gone now. I think we saw diamond prices recover to about $170 a carat, and we're seeing it now in the 120 to 140 range. They're generating strong cash again, and it's been good to see. But it's about 1% of our net asset value.
Is it a good time for streaming and royalty companies? I mean, it's going to be very hard right now for debt. It's also going to be very hard for doing an equity raise.
I think the short answer is yes. We've seen consistent deal flow over 6.5 years. The nature ebbs and flows. But I think at a time like this where, operators need sophisticated, patient, and competitive capital, the sector can provide that. And I think there's ample firepower and opportunity right now.
One of the emphasis with Triple Flag is always talking about getting low carbon emissions or no carbon emissions. How are we doing right now in terms of mines that, you always hear about people coming up to Canada, and the first thing they say about when they're in Canada is that they're hooked up to hydropower, and then I'm going to have low carbon emissions as well too. Is there going to be a pathway to low emissions for people that are in different locales?
I think it's a journey and it's a priority, and it has to happen over time. I think what's going to happen is, as a capital provider, we can assist with sharing of best practices. We do track our carbon emissions, not just our own, but indeed we do scope 3. So our metal entitlement. We've had about 40,000 tons of CO2 equivalent since we started operations or investing over 6 years ago, and we're carbon neutral. We fully offset. So we share best practices. We make sure our own practices really walk the talk in that regard. And I do think with time, you're going to see these technologies just naturally become more economically viable and then proliferate in operations. You'll see some leaders who will do that with battery vehicles and elsewhere. And I think in remote sites, I remember when I was in the nickel business, Raglan was one of my favorite sites up in the subarctic. We displaced some diesel genset because the economics made sense with wind power up there. And I think you'll find more of those use cases as the cost points come down, and it just makes sense, economic sense.
I wonder though about ESG. I notice it's kind of becoming a little bit of a political football with down in Democrats versus Republicans, and then also that fairly or unfairly with what happened with this energy crisis. People have been saying if we didn't have all of this ESG, then we would be facing these shortfalls that we're having right now.
I understand those, and we've seen the greenwashing scandals and everything else that's been going on. For us, what it's meant is it's just good business. I think any serious miner for years is focused on sustainability.
Yeah.
You have to take care of your communities. You have to take care of your workforce. You have to be a good custodian of the mineral resource, and that means doing good work in those areas. So for us, that has mean firstly partnering with the right people. It's just good business. You want to make sure that they're going to continue to prosper and explore and extend, and then your investment becomes more valuable. We enhance their privilege to operate where we can, so we invest about 2% of our net income in scholarships and support programs to enhance that with our operators. And then, of course, the CO2 investment to carbon neutrality. That's how we approach it.
There's been some consolidation in the streaming and royalty space, and I'm thinking of some deals that they had. I was thinking, yes, exactly as well too. Still, it's competitive. That's out there as well too. How do you stand out?
Okay, I think it's important that firstly, I believe the ecosystem is larger than people appreciate for capital deployment. We chose not to compete on the small end because I think we've seen a lot of new entrants and barriers to entry are lower, and you have seen more consolidation there, which I think is very, very welcome. I think on the larger end, larger checks, the ability to structure these deals, we really targeted more with the big three, and that's how we've successfully competed and built our portfolio to date. I think there's ample opportunity to continue to do that, and I think to unlock value and create more relevance, I think M&A is something that, frankly, is a broader topic for the mining sector as a whole. I think we should welcome that and embrace it if we can.
Milestones over the next 12 months. Is there any types of deals or anything that's developing right now that you're looking forward to that's coming online?
I think we've seen, we did the largest precious streaming deal since our inception, which was North Park's $550 million, but that was over 2 years ago. And we've seen some large deals in the last 2 years. We've seen, though, slightly more aggressive behavior in that period, and what we've seen is a lot more development stage opportunities. We've got a lot of dry powder. I think those deals are always available, and we're seeing a lot of them. We're starting to see a resurgence of more cash-generating large opportunities for the first time in 2 years, and I think we're going to see more of that in the future. Standouts, I think there's plenty to go around, and if you're patient and you're focused on generating returns for your investors, we don't have to do everything by quarter. You have to just invest sensibly for the long term. That's what we'll keep doing.
Shaun, thanks for speaking with Kitco.
Thank you.
My name is Michael McRae. I'm with Kitco Mining here at the Gold Forum Americas in Colorado Springs.
Kitco News special coverage of the Gold Forum Americas is brought to you by New Pacific Metals and Silver Core Metals.